All right, chapter 2 is the child is 8, 10, 12. He or she can recognize now what you're doing. They're starting to learn about the world. How do we talk about investing, money, maybe even business with kids? Now, Daniel Masseca, we were chatting by Slack, which is, by the way, not sponsoring this podcast. This podcast is not brought to you by Slack, because Slack, nobody would pay us for this podcast this go around. But we were chatting briefly on Slack before this episode, and you were mentioning a story of how you got started at the age of 8 by a grandmother.
Yeah, my first memory of investing was when I was 8 years old, and my grandmother asked me a question. She said, if you could own any business in the world, which one would it be? And being 8 years old and I wanted to rule everything, I thought of the largest business I could think of, and that was Coca-Cola, a product I saw everywhere, every day. And so she bought shares of Coca-Cola for me and taught me what it meant to be a business owner and let me know that I was now actually a part owner of that company. And I was very proud about that and learned how to look up the ticker symbol in the newspaper. I'd track what was going on, much like a kid would baseball statistics or something. And, went about my life feeling vested in that company. I remember. That's
incredible.
Yeah.
What a great gift. What a grandma.
It really was. And I think, it was really important for me to understand what owning shares of stock were. She did the same for my brother. He picked McDonald's. Both turned out to be really good choices, by the way. I was an investor ever since in an UGMA account. I invested money that eventually helped pay for my wedding and my house. I even remember as a kid, I went to Atlanta to the Coca-Cola factory and thought it would be very important for them to know that I was a shareholder. I would get some special treatment.
Love it.
But I think that really set me on the right trajectory. And because of that, I knew what it meant to be an investor.
So let's be analytical in a way that's almost unfair to a lovely story from one's childhood,
Sure.
full of nostalgia and prosperity. But let's be a little analytical, getting underneath that. What 1, 2, or 3 things was she doing that I can hear and then put into play in conversations I might have with an 8-year-old?
So I think pride of ownership. So know what a stock is, because a stock is a very, conceptual thing unless like you're owning a company, which at its core, that's what you're buying. The second issue is building passion, and made sure I picked something that I was excited about. And thankfully it was publicly traded and she could buy shares. And then got me engaged. So learning how to look it up, which is easier these days, was something I could continually do that made it a part of my life and made it a habit.
Did anybody have a similar experience as a child themselves, or a highly contrasting experience?
I'll just say that I was not quite a child. I was more of a recent college grad, but I had a very similar experience, at least related to Coke, just hearing someone tell me, you can buy that Coke, drink it, and then throw it away, and then you have nothing to show for it. Mm-hmm. Or you can buy part of the company, and 5, 10, 15 years down the road, it'll be worth more than you spent.
So along that same vein, a few years ago, I have a much younger brother-in-law, and he had a ton of video games, and it was his birthday. And for better or worse, I really didn't want to buy him another video game, but felt it would be meaningful to buy him shares of Activision, and thought,
Nice.
Let's get him down the same track that I was. And I thought he probably wouldn't care about it at all, but he was actually very excited to see that he owned shares of Activision, which was putting out a lot of the games he was playing. And I think it was the same thing. It's like he could have a game, or this thing that he spends a lot of money on, he could be a part owner of that company and hopefully build some wealth.
And I see a lot of heads nodding around this table, because we all feel that, I think. There's no better feeling, really, than feeling like every dollar you're throwing at a company, you're actually going to make even more than that back by owning its stock. And that's true of some of the great consumer companies of our time, and we just named some of them.
Yeah, I've got a cabinet or a pantry full of McCormick, and it seems like every evening or dinner has some McCormick product involved.
Jason, it just must make you... Do you sometimes just open the cabinet and just gaze
I look
quietly?
at it with this beam with pride.
Yeah, and you won't admit it to anybody else in your family.
One of my
quietly.
favorite businesses in the world. Listeners to Market Foolery and Motley Fool Money know I'll talk about that company all day if I get the chance.
It's been a great performer for Stock Advisor, among other companies.
It's a wonderful business.
Yeah. So it is that experience of the product or service that I think for a lot of kind of middle school age children, I think it's a very appropriate time to talk with kids about that. They know the world well enough. And so really what you're doing is you're hooking in this entire financial component to the world that they're otherwise seeing, and you're letting them know, switching them on. you can be making money at this thing that you love as well. And one part of it might be showing them where that stock was 10 years ago, whether it's Disney or Coca-Cola or McDonald's or Activision Blizzard. And another part of it is just making them more active observers of that company going forward. Beyond just the pride that Daniel mentioned, you also talked about your grandmother giving you an awareness and an interest. In fact, you pushed it further, Daniel. You said that she taught you some about business. Was she an entrepreneur herself? Or that's such an important thing for us here at The Fool, that it's not just about the markets. It's as much about the businesses themselves and connecting those things.
Yeah, so she is an entrepreneur. She ran an antique gallery back in South Africa where she's from. She runs a real estate practice now.
Wow.
And I
So
think
cool.
that probably imparted some entrepreneurial spirit in me that I still have today, was getting involved at such a young age with that kind of understanding and excitement.
So I guess just to stick with the chronology that we've been kind of shaping, the narrative of the newborn to the middle child, I mean, one thing we hope our listeners are inspired to do is to start that account early. And that's kind of the nuts and bolts. That's blocking out the time, having the conversation with the financial representative, getting the account funded. But really from that point on, it's as much about the conversations we have and the culture that you raise that child in. And I want to talk briefly about that. So certainly one thing that we all love here at the Motley Fool, you're not required to feel this way to be hired here, but I bet you just often do it automatically, is that you love business. You think, it's amazing that we have these trades and you're good at this and I'm good at this, so I'll buy from you and you buy from me. And it's a much better world when I'm getting your best and you're getting my best and we're trading back and forth. So there's a lot of positivity to that. There's a lot of optimism to thinking that the world will get better, which I think that it has in so many ways. Of course, never perfectly, and sometimes worse in different contexts. But for the most part, look at a graph of the Dow Jones Industrial Average over the last century. It starts in the lower left and it goes to the upper right. And that's our expectation over the next century. So given that, I feel like we're talking a lot about the do's. Do this, do that. Does anybody have a don't that's on their mind? Something that didn't work for you either as a young person growing up or with young people that you're associated with?
I would say, I think I have anecdotally heard stories of people say, like, my kid loved this company, so I bought that one stock, and that one stock didn't do well. So their first
GoPro.
Exactly.
They love the
Right.
GoPro.
Pets.com, right? Like, my kids love pets. We'll get pets.com. It didn't work out. And that's the wrong, I mean, every kid should learn that stocks do go down, and some do just go out of business. So for my kids, what we've done is they've been allowed to choose stocks, but we have also had index funds, both U.S., S&P 500, and international, so that they understand the ups and downs of just the overall stock market, as well as understanding the ups and downs of individual companies.
And with an index fund, then you're able to get exposure to a bit more than, maybe one share of Amazon if you can swing that. So not all of your eggs are in one basket. You have some exposure to, maybe 500 companies if you're in a S&P index.
Yes, I have to admit, there is a strong bias, not even an unconscious one on this podcast, about owning stocks and loving stocks. But certainly I know Naima and Daniel, you both in particular, every day are fielding questions and having conversations that are far more probably often about funds than about stocks themselves.
Right, that's true. And earlier you asked about amounts, and I think that speaks directly to your goal for helping someone get started. So if you were trying to teach a child about investing, you probably wouldn't want to give them access to everything you've been saving and tell them to invest it. So putting a smaller amount in maybe the individual stocks they're passionate about, and the rest in something like an index fund or a more widely diversified pool of stocks may make a lot of sense.
Yeah, and I think framing it up from the very beginning so that expectations are realistic. I mean, we have brokerage accounts for each daughter as well, where they are able to add individual stocks. I
was wondering about that, Jason, because you've mentioned about picking stocks with them, but then you were saying 529, so I was thinking...
Well, they do have both, actually. That is, perhaps we can get into that story as well. But my main point being in framing the expectations from the very get-go and saying, look, you're going to have this account, you're going to have this portfolio, and you're going to own shares of 12 different companies. They're not all going to be winners. As a matter of fact, probably 4 of them are going to be losers. And that's just the name of the game. It's not about batting 1,000, right? It's about finding some great businesses, investing in a lot of different businesses, and chances are that the math will work out where you get some good winners. And when you get some really good winners, they can just keep on going up and up and up, when really the downside is capped at zero for virtually any individual investment. So I think framing the expectations appropriately from the very beginning helps, particularly when they're kids and understanding what they're actually trying to do.
Has it helped teaching them to be long-term investors? Because, they may see that, one of their stocks went down, so they want to get out, or have you had those conversations of, let's wait some time and see how it does over this period of time?
It definitely does. And I think starting at that age, sort of this added benefit where they're only so interested in it until they want to actually go play a video game or talk with their friends or something. So it's not like we're sitting at the dinner table every night talking about their portfolios. We'll probably check in maybe once a quarter and I say, hey, look, there's your Apple stock. You've owned that since 2013. It's up 150%. But, oh, yeah, look, you got TripAdvisor there, too. And that one's still down. But, you've got this big portfolio of 12 stocks now, and it looks like you're doing okay. And then they kind of want to go off and do something else. So the benefit there is that at that age, they're only so interested in it. They don't want to talk about it all the time. And when it's not something that's at the top of their mind, they're certainly not sitting there saying, oh, man, I really probably ought to sell that TripAdvisor position because it's obviously a loser. And as time goes on, they do see the benefit of kind of ignoring it and letting it kind of take its course. And some of those losers can turn out to be winners after all.
Now, certainly one of the recurring themes of this podcast is a love of games and games. I'm curious if anybody else had the experience I did, which is I first kind of got excited by the stock market, not by my parents, but by a fourth grade contest that Mr. Hoskinson at St. Albans School in Washington, D.C. ran for us, where we each were supposed to pick 10 stocks. We typed them in and kept up. It wasn't even that we typed them into a computer, because this is quite a long time ago, so it was more like a typewriter, maybe handwritten, but as much of the game was about looking in the newspaper for the stock quotes and writing them down and doing some math. So it was as much about math. But I did something that I think a lot of my fellow classmates did. I basically just went home, let my parents pick my stocks for me. And as it turns out, my dad in particular distinguished himself. And I won the contest about 3 months later, which, by the way, we all know 3 months doesn't tell a lot, and that was incredibly lucky. But as a reward, I got this oversized, I can still see it, Hershey bar. I think it might have been with almonds. And it was like a great big, I mean, you know how you have like checks that are charity check, and it's a $25,000 check that's bigger than 4 people? Well, that's kind of how that candy bar looks to me today, years later. So I think for kids who enjoy games, at least for me, that was true of me, gaming it up, making a little bit of a competition, maybe a family competition, or just the math of it, I think that can also speak to some kids.
Well, if you recall, speaking of gamifying it and sort of combining the gamifying and the media part of it, my daughters, not all that long ago, were part of a supernova exploration.
Ah, yes,
Jason. And they helped participate in whittling down the 4 companies to one eventual winner, which I believe that winner was Hasbro. My daughters were thrilled. They owned shares themselves.
Wonderful.
And that really, I think, lit the fire in them. So even now, they are telling me that they want to intern here when they're old enough, and then they want to get a job here once they get out of college. So thank you, David. I think you've offered some financial security for generations to come to the Moser family.
You bet. I think you're doing a little bit more than I am for them in that regard. But thank you, Jason. I'm glad, and thank you for that reminder. And so, yeah, not everybody's going to have the opportunity the Moser girls have hanging out at Fool HQ, but anybody can make it fun for a child. Anybody can game it up. Not everybody loves games, but if your kids do, then yes, there's things like fantasy football, and yes, there are fun mobile app games, but the stock market and following stocks and maybe having a competition with the cousins or the parents or a family thing, or we're here at the start of a new year. In a sense, every day is the start of the next 365 days. So you could kick off a little competition that might speak to a child. Before we go to chapter 3, which is going to be twisting the arm of a high school or college grad to get them started, I wanted to ask just a little bit more about money, because I think when a lot of people think about money and kids in middle school, they're not really thinking about the stock market or a 529 plan. They're thinking about allowances or like how to do money right or better with kids. So any opinions from my talented panel about things that aren't investing but are money for middle school kids?
So I'm just going to say, disclaimer, I do not have children. But I think one of the things I remember as a child in terms of allowance was I had a really good friend who her parents, they provided them with like a base allowance. And then they would get different dollar increments depending on the chore. So you would get your $10 a week. But if you decided that you wanted to mow the lawn, or if it was snowing, shovel their, long driveway and the stairs, then you got an extra $20. If you babysat, like if she babysat her younger siblings, she would get an extra $5 or however that played out. But then also teaching the value of save, share, and spend. So utilizing that where it's an automatic, every time I receive an allowance, a portion of this, whether it's $1, $2, 20 cents, 50 cents, is going towards saving, going towards spending, and then also going towards sharing if you want to teach them to be philanthropic.
So, when I think about allowances, I think it's just about how incredibly lame I was as a parent.
Dude,
and how inconsistent. Robert, you too?
Yeah.
Yeah, I mean, we were so not best practice on allowances for kids. Like we did it sometimes and not others. There was no earned component, which Naima, I think, spoke very well to. I still feel okay with how our kids have turned out. So I'm not sure it's all about having the right way to do allowances. But I'll say this, Robert. You can be pretty bad at it and not do, I hope, permanent damage to children.
I will say I'm pretty confident that the evidence is clear that whether a kid got an allowance or not did not have a huge impact on whether they were financially successful later in life.
Okay.
Because I looked that up. Chores are a different thing. It is good for kids to do chores, but the allowance was not as important, which made me feel good because I was horrible at doing it, mostly being the kids would say, it's time for my allowance, and I didn't have the cash. That was the problem.
Okay. We also weren't great at Tooth Fairy, for the record. We occasionally like, Mom, Dad, the fairy didn't come last night. Oh, wait, no, honey. Look back underneath. Oh, it fell. Look over here on the floor underneath
fell in my pocket.
The pillow.
She's playing a game. Part of it is to try to find it.
And I also just want to say something before we move to chapter 3, our final chapter, about matching. Because while I never did this, we have had some great stories. We've told them in some of our Motley Fool books of the past. True stories about usually kids with a lot of initiative who realized, just like we talk about the power of corporate matching, like your company matching your 401k donation, children, we can match. Let's say your child saves $1. You could say for every $1, honey, that you save, your mother and I will give you $1 extra. But some kids have an extra dose of initiative. And so the stories that we've told through our books are kids who said, beyond just mom and dad, I have aunts and uncles who love me. I have grandparents who love me. I have mentors that might be proud of me if I got an A. And so there are stories of kids, for every $1 they save, all of a sudden 12 additional dollars are being triggered through conversations with family members. And then for every A that was earned, and then you can have huge amounts of money sometimes, well more than you would expect if you have a culture surrounding you that wants you to succeed at saving or doing well in school. So before we move on, I wanted to talk briefly about the power of matching. You hope your company or workplace does it for you as a professional. Darn it, you can do it. I would encourage us all to do that for younger people in our lives. If they do something well, give them an extra buck, match.
I agree. Now, I'll say that while we in concept have matched, we didn't really apply a formula or any sort of consistent philosophy to it. It was more, I'm kind of lazy and I don't really feel
the
like
Brokamp Gardner approach to allowances. It was kind of lame, lazy, but well-meaning.
Tooth fairy money or birthday money. Part of that would be you may have that to spend, but part of that we want to put into your brokerage account so that you can contribute to your investments and have some ownership there. And then my wife and I would help top that account off so they could buy a few shares of a given company. So we didn't really apply the formula dollar for dollar, but the concept I think still works.
Well, in the story that I was thinking of, Jason, it was as much the child she was just on fire with the idea of matching and started to realize in the most enterprising way that she could get all kinds of people, maybe like the mailman. Everyone's contributing, matching what she was doing. So anyway, some of these stories or ideas are going to make sense to some of us and not others. We're just trying to paint as much of the canvas as we can, knowing in the end that it's each person's individual, unique portrait.